Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, I'm going to take you through the price of gold as it rejects the $1,800 level. Now you can see here this afternoon we had some red folder data out of the US, and it was the ISM services PMI, and it's came in a little bit above expectations and above the previous. So the previous was 54.4. We're expecting a drop that hasn't happened. Actually, we've come out higher at 56.5. So just to understand what the ISM services PMI is, just to let you know where this is, if you are on Forex Factory like I am here, just click the detail and it opens up and it gives you all the information here of what you're looking at, so you can learn more about your fundamentals in the market. So you can see here, what does it measure? It level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. An actual greater than forecast is good for the currency, so it's saying that the 56.5 would be a positive thing for the dollar, which is what we're seeing at the moment. So basically what it shows us is above 50 indicates industry expansion, so that to me is a suggestion of good economic health, and that what we are seeing is that dollar strength follow through right now. And that was a really nice rejection here of this $1,800 level. That was our targets from last week. We were talking about looking for longs from the 1725s down to the $1,800 and waiting to see if anyone started to take their positions off there. And then you have that data that backs up those dollar bulls at the moment. Now what's interesting about this move here is that it could influence a bit of a move further as well. If I just go down to the 4-hour time frame, we can actually see that price has now traded through the previous structure lows here, so that could be considered a double top pattern. And if we were to get two secondary closes out of this low, that could suggest that the market is now about to change trend, and what we may see is a move down to this trend line support, a move away, and a lower high being formed around about the 1781 neckline handle. If price then continues to trade to the downside, the next stop for it will be 1725 again. So we have to be a little bit careful here. Obviously, we know the dollar isn't as strong at the moment. However, although a lot of analysts are reading that it is a dovish tone that the Federal Reserve has set, we can kind of look at it and say, well, it's not really. It's just a less hawkish tone that they have set. So I do still think the US dollar has some downside in the very, very short term, especially into the 103 handle. But it could also swing the other way because it wasn't it wasn't a dovish talk from the Fed. So $1,800 seems to be that rejection point for gold, and if we can stay in a 4-hour downward trend, making lower lows and lower highs, there could be an expectation for gold to actually move back down to that 1725 handle, depending on the rest of the dollar news that follows on this week. So I hope that made sense. If it did, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I will speak to you in the next video.